Hey everyone, how's it going? My name is Richard Moglen, and welcome back to another Stock Market Outlook video sponsored by MarketSmith. As always, we'll do a thorough run through of the market indexes, the leaders, and how they're acting at this time. And we'll talk about my previous watch list, how I performed over the past week. Then we'll move on to sentiment from a few different sources, the IBD Big Picture article, and then finally the Wishing Wealth GMI signal. And if you do enjoy my analysis, please go ahead and leave a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. Now, my current view of the markets, I'll just tell you right off the bat, is now a market in correction. Last weekend, my view was an uptrend under pressure. We saw the first dip under the 21 EMA on the NASDAQ composite, the S&P 500, and we're seeing a lot of distribution in growth stocks, and especially the leaders. And kind of this week just kind of made things worse. We saw increased distribution, a bunch of distribution days on the indexes, and also on leading names and growth stocks in general. So at this moment, my view is market in correction, and I'll be watching for signs of a new uptrend emerging. I want to see decoupling from market leaders. I want them to form sound new bases, and we have to see some type of rally attempt on the overall indexes before I really want to dive deep into the market. So with that said, we'll cover a lot today, as I've mentioned, and hopefully this gives you a thorough idea of the current state of the market. So first, taking a look at the NASDAQ composite, we are now below the 50-day SMA. We've undercut this level, so we've got a failed breakout as well. We're below this key moving average, and the 21 EMA is pointing to the downside. At this moment, it's very volatile. It's just not the ideal environment for traders, swing traders, position traders. And when things get really wide and loose like this, it's hard to define risk, and you're basically better off being in cash and on the sidelines and waiting for conditions to improve once again. You basically always want to ask yourself, what were the conditions like when I made the most amount of progress in my account? And for me, it's when we're above a rising 21 and 50 SMA. Growth stock leaders are performing well. Ranges are relatively tight or breaking to the upside. And we're basically seeing healthy market leadership and a wide, diverse range of market leaders as well from many different industry groups. And right now, it's just not that type of environment. If you are curious about how to handle a market pullback like this, I've made an entire video on that subject. It should be linked above right now. Basically, it talks through the steps you should take, as well as how to protect your mental capital, which is just as important as your financial capital. So that's a run through of the NASDAQ composite. And there were many warning signs before this really started falling apart here. First of all, in terms of feedback from my own account, I tried a few trades in here, was stopped out even before this downside reversal. This day was a negative expectation breaker. Then we failed the 21 EMA. And then we had some more downside reversals and just negative price action overall, not just on the indexes, but on leading names. And on this day right here, I believe on the Tuesday, I tried some breakouts, MRAM, Roblox, and they were acting well, up 4 or 5% each. And then all of them reversed very, very hard. And I was basically stopped out for scratch trades, basically very small losses, or just break even. So some more feedback here from an account. I think that's one of the most important things to keep track of. And it's a great kind of indicator of the current market environment. It doesn't matter whether the market is trading at all-time highs or is breaking key moving averages. If you aren't able to trade successfully, you should take a step back and kind of rethink things. Maybe you're not trading well, maybe your strategy is not right for the current environment, or maybe there's just some underlying issues with the market that aren't really showing up on these indexes because they are very large cap weighted. So with that said, let's move on to the S&P 500, which looks pretty similar to the NASDAQ composite, but it's always good to look through all the indexes here. We're also below the 50 SMA, 21 EMA, and we're seeing that same type of decline. And we're now below this level, or just at this level at this moment. So that is the S&P 500. Once again, this is when the big money is made during sustained trends. And when we're kind of breaking down, things are very volatile. It's hard to manage risk, and not a lot of breakouts are going to work. Moving on, it's also great to look at the FFTY, which gives kind of a better sense of growth stocks, and this looks even worse than the large cap dominated indexes, the QQQ, the NASDAQ composite, S&P 500. And here you can see we've failed a green line breakout. We are in a long-term consolidation, tried to break out, formed another base, and then failed that with some pretty big distribution bars. And we're below the 200-day moving average with a pretty bad bar on this Friday on high volume. So this index does not look good. Also looking at small caps in general, the IWM, this also had a failed breakout, also not a good sign for the overall market. We had a gap down on Monday, and we're below all the key moving averages at this point. Looking at small cap growth, the IWO, this looks very similar, actually worse, back near the bottom of this base. This didn't even manage to break out, but it did kind of push through these type of pivots around 315 or so and fail that, and we're back below all the key moving averages. So basically, on all these indexes, we're already correcting, and we're just kind of waiting for some type of increased distribution, some capitulation, then some tight ranges to form, and then we can potentially start the beginning of a bottoming process with a move up. Then, of course, we're going to go sideways, maybe even retest these lows, start a new trend, but we could just reconfirm higher. So that's kind of what I'm watching for. Tightening of ranges, definitely, and then a potential start of a new uptrend with a fall through day. And of course, you have to have leaders emerging from proper and sound bases. And right now, we're just way too early in the process for that to happen. So we'll have to see what happens in the coming weeks. But no one knows how long or how far down the market will go, how long this correction will basically last. You just have to stay vigilant, note relative strength, and try to find those leaders that could be the biggest winners coming out of this correction, because people often forget that corrections are a good thing. They're a healthy, natural part of the market cycle, and they set up a ton of excellent opportunities that hopefully we can capitalize on once the new uptrend resumes. So with that said, let's take a look at some leaders which did get hit pretty hard. First up, we've got Roblox. And here's the failed breakout that I was talking about, but it is holding above the 21 EMA, and this overall chart does not look broken. And in terms of relative strength, is holding up above the 21 EMA when the overall market is not. So definitely this is still on my list and potentially actionable, even though it did have some failed breakouts. But maybe it forms a base below this level, goes sideways, maybe even pulls back to this prior pivot around 100, and then forms a base right here. But looking at this chart, it does look like it might need a few weeks to really set up. Also taking a look at Tesla, you can see it broke this range here on Friday. It is holding above 1,000, but I definitely want to see that hold along with the 50 SMA. And if those aren't able to hold, I wouldn't be surprised to see it trading below this level and even pulling back all the way to this prior pivot and filling this gap right here. And I was just talking with Oliver, and he pointed out this unfilled gap, which is a sign of weakness right near the top of this structure right here. So that is Tesla. Definitely needs some time as well. Maybe it kind of forms out a base like it did back in this area, but right now it's just wait and see, and there is a lot of distribution within this price pattern. Moving on, let's also take a look at some of the largest caps in the market. These are holding up okay. You've got Amazon here holding above its 200-day, but also just back within this longer term consolidation period. Apple probably looks the best of these above the 21 EMA, but you did have a downside reversal, and you definitely want to see this area, the 21 EMA, hold, and for it to hold above this prior pivot. Otherwise, we could really see some damage done on the indexes. Looking at some other of the big names, let's take a look at Netflix. This is pointing back to the prior pivot. You definitely want to see this hold right here. And once again, this looks like the left side of a base or just a longer term downtrend with the 21 EMA about to pierce below that 50 SMA. Looking at Nvidia, in general, semis have been holding up pretty well. AMD also looks pretty good. NXPI, another semiconductor name, is holding up pretty well. But once again, these are showing a little bit of weakness here. You had a break below this structure on Friday, and ideally it just kind of holds this area, holds this area as well. It just forms out a flat base as the general market corrects. But you do see some distribution coming in late last week with some poor closes here. Downside reversal, also a warning sign here, and now it's confirming to the downside, but it is holding above 300 and these levels as of this moment. Looking at AMD, this is also holding up okay, but once again, you're breaking below this structure, and overall it just looks like it needs a little bit of time before it would set up constructively. So in all, that's kind of my general take on the indexes, some leading names as well. Many of them just need time, and no one knows how long or how far this correction will go or last. So moving on, let's take a look at some more charts in TC2000, and we'll run through these pretty quickly because many of them are pretty broken. Let's sort by that weekly change, and sorting by weekly change is a great way to look for relative strength at this point. And the two that stand out to me are AMBA and APP. So AMBA did have a gap up, not a great close, but it is holding up reasonably well, holding those short-term moving averages, the 21 EMA. I would love to see it just build sideways like this, but we'll have to see what happens. This isn't a great close. This gap up looks like it was sold into, in my opinion. App is definitely interesting. You can see it's holding the anchored VWAP from this bar right here, as well as the prior base pivot. And it actually had a secondary price at around 83, I believe, that it absorbed really nicely and had an excellent closing range when the rest of the market was pretty poor on this Friday. And this overall downtrend is on below average volume if you take a look down here. And as of right now, it is holding up well and is on my relative strength list. But corrections are pretty brutal, and this could obviously reverse tomorrow. But really all we can do is kind of keep track of relative strength day to day and look for stocks that basically show up repeatedly on those type of lists. And at the end of the day, when the overall market resumes the uptrend, those stocks that showed up day after day on the RS list with their relative strength lines near new highs and basically being close to new highs when the market is just coming off its lows, those are your potential new leaders. Nvidia, we already covered, showing some relative strength, holding up above the 21 EMA. AB&B failing this breakout here. It never actually broke out to new all-time highs, but not great action here, breaking below the earnings gap low. Tesla, we already covered, looks a little weak. AMD holding up reasonably well, but below its 21 EMA. Zscaler holding the 50 SMA, very bad bar here after earnings. This was sold into. Lucid holding up okay, and good close actually up above the 21 EMA now. But this does look a little weak, and I wouldn't be surprised to see it take out these lows next week. But I would like to see it hold above 43, and also the high volume close. I would love to see that respected near 35, which is also the 50 SMA if it does pull back that far. Netflix breaking down as I mentioned. DDOG holding near that 50 SMA. This looks like the left side of a base to me. MTDR, not really a leader at this point. And many of these are pretty broken, so I'll be completely resetting this list in the weeks to come below all the short-term moving averages at this moment. AHR also in a downtrend, looking like it's forming the left side of a base. Definitely want to watch because this is a younger name and showed a ton of relative strength from this first stage base. Team looks like it's in a downtrend at this moment, doesn't look great. Perry the same. SPT back to its 200-day and kind of this prior consolidation level, a little bit of confluence at this point, but you do have some pretty bad liquidation bars at this point and pretty high volume on Friday as well. ENPH was holding up well, but you can see corrections take out every leader, and you had a pretty bad bar on this Friday with a gap up being sold into. Coin also breaking down. This is pretty disappointing, but I'll be watching to see if this resets at any given point. But at this moment, it's a no touch for me below all the key moving averages. TDD also failing its breakout here. Doesn't look great. Pretty bad bars on this day as well as on Friday. Dash looks like it's forming the left side of a base here. Needs a lot of time in my opinion. Bros also just needs time. I wouldn't be surprised to see if it finds support near this prior consolidation, near 42 or so. Crowd looks pretty bad within a downtrend at this moment. SC within a downtrend as well. And many of these former leaders who were super strong in 2020, don't expect them to be the leaders in the next cycle. Often there's kind of a changing of the guard here, and many of these Crowd, SC, Net could pull back a lot further than anyone believes and completely kind of reset their charts at this moment. Net pulling back pretty hard below the 50 SMA, doesn't look great. You see an increase in distribution in the red bars here. DOCN, pretty bad bar on this day. Definitely you want to have your stop set probably at this Ignite bar, this low right here around 119 or so. And right now it's just below all the key moving averages. UPSD holding up okay near the 200-day moving average and this prior base pivot, but showing relative weakness in my opinion, and it's below all the key moving averages, and you can't argue with price or the price trends. LC looks like it's forming a downtrend, but potentially the left side of a base. This looks like pretty controlled selling in my opinion. Task looks like it needs a longer term base, pretty broken, and really it changed character after this failed push up. Heavy volume without further price progress, and then high volume to the downside as it broke these lows. In mode also looks like it needs a lot of time. Maybe it has a meeting with a 200-day moving average. Mara also breaking down on Friday. Skin as well breaking all these lows right here. Unity also pulling back hard. Definitely one to still watch, but it has broken back below this pivot. S looks like it needs a lot of time. You can see a lot of these got hit very, very hard. SI as well. Definitely kind of stick with the more liquid names, especially in this type of environment when liquidity is low And these type of names with only 26.2 million shares can pull back and get distributed very, very quickly. And this bar right here, which I noted a few weeks ago, was kind of a tell. And then you had some failed breakouts to the upside last week. Bill also pulling back hard below all the key moving averages except the 200-day moving average. Firm looks like it needs a lot of time. Maybe it has a date with the 200-day as well as this former consolidation near 92 or so. Hut pulling back pretty hard as well after a failed breakout here. And lastly, we've got ASAN, which had a gap down on Friday on very high volume. So most of these just look like they're in downtrends at this moment. And right now, the environment is not great for growth traders. Many charts look no better than any of these stocks. So let me know in the comments any stocks that you've noticed have held up really, really well over the past 2 weeks or so and could be potential leaders going forward. With that said, let's cover my focus list from last week. Many of these were hit pretty hard and we've already covered them. AMD, Bros, EMPH, GLBE also just basing here, very volatile action, hard to manage risk here. MRAM, I tried this on this day and basically took a scratch. It was looking good. I think it was up 5% or so. But yeah, it just didn't work out. And it's not acting like we're in a healthy environment at this point, although it is holding up above the 21 EMA. So could potentially still be actionable within the coming weeks and months. MTTR also pulling back very, very hard. Nvidia, we already talked about. PUBM also failed breakout. Another one I tried on this Tuesday for a scratch and is holding up okay. But you had a little bit of weakness here on this day and this day. A lot of selling going on under the surface, although you did hold up reasonably well on this Friday. Qualcomm just going sideways here after this gap up looks still pretty strong, and basically semis in general are holding up pretty well. Roblox we talked about already, holding the 21 EMA. SI we talked about, and GD and U we also talked about. So basically you want to be looking for stocks that are holding up well, holding up above their 21 EMA. That would be a great scan to run. PUBM, QCOM showing a little bit of relative strength, but don't be surprised to see new leaders that you haven't even heard of emerge and really perform when the overall market turns back around. And many of these old leaders will just kind of continue in their downtrends or just kind of lag the general market for a very, very long time. If we bring up SQ, you can see that stocks that had super powerful runs can base a lot longer than we think. Basically, this went sideways and was dead money for 1.7 years. And if we have a more extended correction, and I'm not trying to scare anybody, but if we do see a longer term, basically correction like 2008 or 2000, I have no idea if that's going to happen, but stocks can go sideways for a lot longer than anybody thinks. So never fall in love with an SE, as an SQ, PayPal, whatever. Any stock can base for an extended period of time and basically be dead money when the overall market continues upward and recovers. So with that said, let's move on to my surveys here on Twitter, and let's go ahead and take a look at sentiment. So first of all, we did see a dip from 36.4% bullish, now 30.2% bullish. This is pretty significant, and this is pretty low historically, so keep that in mind. There is some sign of fear within the market. Looking at the name exposure next, this is also decreasing, which is a good sign, but still a lot left to fall here. I would love to see this back near 50, 60. That would mean there's a lot of fear coming into these money managers. Looking at the psychological indicators from IBD, the Bulls vs. Bears poll, we are pulling back significantly, although nowhere near touching at this moment. And also looking at the put call ratio, we are seeing fear come in. That's great. I would love to see this get to 1.15. That would be awesome. So overall, there is some fear coming into the sentiment indicators, but once again, the price action of the leaders, the price action of the market indexes, and your kind of performance on test trades, that's the kind of best indication of the current market environment. And moving on, let's take a look at the IBD Big Picture article, and the headline is "Stock Market Woes Return, Why Investors Have More Reason to Turn Defensive." So reading through, discuss the action in the market indexes, how it's very negative on this Friday. They discuss the weaker than expected jobs report here, and also they discuss how volume rose on the NASDAQ and NYSE. Overall, they discuss the stock market outlook, how it's currently a market in correction. Many leading stocks are in trouble, and overall, there's not too many things to say that are really optimistic. So currently, their current outlook, market in correction, only one leader up in volume, MRVL, and a bunch of leaders down in volume. Lastly, we've got the Wishing Wealth GMI signal, which is now red since December 1st, so that's significant. So kind of all these indicators are kind of lining up together and saying for traders and swing traders and position traders that it's not the ideal time to be very, very exposed within the market. And Dr. Wish also has a quick write-up about his SQQQ strategy. So definitely give that a read if you haven't already. So overall, my current outlook is now a market in correction. I'm shifting that from basically uptrend under pressure last weekend to now we've kind of confirmed that weakness with another week distribution on the indexes and leading names. And right now, I think we just need time to reset, form out bases, and also kind of give the market indexes time to fully correct, form tight ranges, and start a potential new uptrend. So keep that in mind. Don't try to pick the bottom, and instead just let the price action of the leading names as well as the market indexes tell you when it's basically time to put your money back to work and test out new opportunities and potential new leaders. So I hope you guys enjoyed this video. If you did, go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos. Thanks.